Hi everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of corporate finance sometimes. A company is more exciting than a new phone release. Well, almost. Today we're diving into reAlpha Tech Corp's latest report to see what's really going on with this company that's involved in the real estate and technology space. They just closed an offering of their stock and warrants, so it's decode what that means for investors. reAlpha Tech Corp is putting out a report about something that happened on July 18th, late last week, technically. This company, reAlpha Tech Corp, is letting us know about a significant event. They've been selling shares of their common stock. Think of common stock as the basic ownership pieces of a company. And these shares are traded on the Nasdaq, which is a major stock exchange. Now, reAlpha Tech is calling itself an emerging growth company. This means they are a younger company and get some special treatment under the law, like being able to delay providing certain financial details that older, bigger companies have to. It's like a sandbox for newer businesses to grow without being immediately burdened by the same reporting rules as giants. The main event here, the big news they're sharing, is about an offering they had. They started what's called a best efforts public offering. This basically means they are trying their best to sell this stock and other things they're offering as part of this deal. They offered a lot of shares. Over 13 million shares of their common stock were up for grabs. On top of the stock, they also offered something called Series A1 warrants. And they tossed in Series A2 warrants too. Now, what are warrants? Think of a warrant like a coupon. It gives the person who buys it the right, but not the obligation, to buy shares of the company does well. They're attaching these warrants to the stock offering to make the whole package more attractive. Well, the whole package, a share of stock plus these two types of warrants, was sold for just 15 cents. That's a very low price. When companies sell stock at such a low price, especially with warrants, it often signals that they are trying to raise capital quickly for growth or to cover operational costs. And this might mean they are still in the early stages of their business development and are looking for significant investment. After all the fees and costs associated with selling all these shares and warrants, the company ended up with about $1.56 million. So they sold a lot of pieces of their company and got a little over $1.5 million in return. And on July 18th, they officially announced that this whole selling process, this offering, was finished. They closed the deal. This important announcement about closing the offering is included as an exhibit. And of course, these reports always come with an interactive data file for all the finance nerds out there. Now, let's talk about what this means. Selling stock and warrants is a common way for companies, especially emerging ones like reAlpha Tech, to get money to fund their operations, develop new products or services, or expand their business. A low price point of 15 cents per unit suggests they are trying to attract a wide range of investors, perhaps including individual investors who might be more willing to take a chance on a younger company for such a low entry price. The fact that they're offering warrants alongside the stock means they are also looking to get more capital in the future if their stock price rises and investors decide to use those warrant coupons. For investors, this could be an opportunity to get in early on a company they believe in, but it also comes with a higher risk, as emerging companies are naturally more volatile and less predictable than established ones. The $1.56 million they raised might seem like a lot, but in the tech and real estate world, it can be business. A low price point of 15 cents per unit suggests they to use those warrant coupons. For investors, this could be an opportunity to get in early on a company they believe in, but it also comes with... My take on this is that reAlpha Tech is in a capital-intensive phase of its development. Raising funds through a public offering, especially at such a low price point with attached warrants, is a clear indicator that they are prioritizing growth and market expansion. While this offers a potential upside for investors who believe in their long-term vision, it also carries the inherent risks associated with early-stage companies. The company's focus on real estate and technology suggests they are aiming to leverage technology to disrupt traditional real estate, and technology suggests they are aiming to leverage technology to disrupt traditional real estate, and technology suggests they are aiming to leverage technology to disrupt traditional real estate models, which is a potentially lucrative but highly competitive market. The key for reAlpha Tech will be its ability to effectively deploy the capital raised to achieve tangible milestones, demonstrate a clear path to profitability, and manage the inherent volatility of the market. The warrants offer a future funding avenue, but their exercise will depend heavily on the company. Alright, that's our quick decode of reAlpha Tech Corp's latest announcement. What's your take on these numbers and what they signal for the company's future? drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.